The Ghana Association of Banks is urging policymakers to maintain the recent gains in macroeconomic stability, saying consistency is key for long-term planning and will strengthen the sector's ability to lend to businesses. The call follows the Bank of Ghana's decision to cut the policy rate to 18%, with the December Ghana reference rate dropping to 15.9% and inflation easing to 6.3%. Now, Chief Executive Officer of the Ghana Association of Banks, John Iwa, speaking at the DBG UGBS Development Finance Dialogue Series, urged policymakers to implement measures that make the financial ecosystem more conducive for lending to businesses.
The politics of the economics is dangerous when we try to make exchange rate, interest rate, everything political. Because when we see this in the economy, the business community will struggle. We need the economic fundamentals to work. I mean, now we are all kind of coasting nicely, but we need it to be sustained over the long term, and then banks on the back of that can properly lend to the business community. We need to work on the ecosystem, the credit infrastructure, fiscal discipline, because we've all seen lending rate in February was at 34%. As we speak, it's at 20%. It is the same bankers who were charging 34% and in the same bankers who are charging 20%. What has changed is proper management of the country, because there's fiscal discipline, the monetary policy is also working effectively. Together, fundamentals have dropped to levels that are acceptable, and the rates have automatically dropped. So it didn't have to take a bank to say, I'm charging you too high. The system, the infrastructure, the economy, when it's working properly, is